Guys, you're welcome to Club 9. My name is Ola Harry. Yes, today we are talking about risk management. Yes, you see, in trading, risk management is one of the best things because before you even take your trade you already know how much you want to risk. Okay, this is something you need to always know when you're taking trades. You need to know how much you're willing to lose. And when it comes to risk, it's about money. Okay, it's about risking your money, and when you know how much you want to lose, it makes it easier for you to even take the trade. Yep. So for you to take a trade, you need to know some things. Let me just mention those things. Okay. So you need a strategy. You need to be in control of your strategy. Okay. You also need to analyze the market. You also need to review the market, then follow your rules. Don't forget. Then the last one will now be capital exposure. Let me take that again. Strategy, control, analysis, review, and follow your rules and capital exposure. Now, what I will lay more emphasis on is the capital exposure because that is where the risk comes in. Okay, how much risk are you willing to take? Now, personally, I always advise most of our members to, when if you have $100,000 or you have $10,000, don't go all in. That would be too risky, right? So there's a formula we have that will show you on how you can take trades. Okay, let me quickly show you the formula before I go into the chart. Then we're going to use an example to see how you can manage your risk to ensure you're not losing more in case the trade goes against you. So let's take example of a $500 capital. Okay, you have $500 capital. This is it, and you have 20x. This is it. You're using 20x. That simply means your borrowed amount will be this $10,000. Now the question is, out of the $10,000, okay, that's your leverage plus your capital. You're going to be risking just 20%. Okay, 20%. That's we are recommending that you can go higher or you can go lower depending on your risk appetite. Okay, but for the purpose of this video, let us use 20%. Okay, so 20% of $10,000 will give us $2,000. Okay, so it simply means you have $2,000 to trade with. Okay, now the next thing you need to know, your risk to reward. You need to know your risk to reward. So how much are you willing to risk out of this $2,000? Okay, you're willing to risk 1 to 2, 1 to 3, or 1 to 5. So we also recommend 1 to 3. You can go for 1 to 2 or 1 to 5, depending on you. Depending if you know your trading skill, yes, then that will determine what you go for. Now, the 1 to 2, then that will be you're willing to lose 1% and you're willing to gain 2%. The other one is you're willing to lose 1%, and the other one is you're willing to gain 3%. And the last one, which is you're willing to lose 1%, you're also willing to gain 5%. Okay, so in amount, it results to $20. So on any trade you're taking, you're willing to lose $20. And when it comes to your profit, you're willing to gain $60. Okay, that is the plan. So make sure that you always follow the plan. When you follow the plan, it makes it easier for you to achieve more. Okay, yes. So this is exactly how it is. So this is your risk. You can see that before you even start a trade, you already know your risk and you already know your reward. So when you're trading based on your strategy, that is what you should follow. Because if you don't follow this, it might probably destabilize your plan. And when it destabilizes your plan, you might encounter more losses. Okay, because psychologically you're not stable and you have a lot of anxiety. You want to make money, and because of that, indirectly you will just be taking losing trades. You see, so not that you have a bad strategy, but you're not following the plan, and psychologically you're already losing it. So that's exactly what you don't want to see happen. So this is an example of a $500 account, and this is how to manage it. So understand your risk before you take a trade. If you don't understand your risk, you might probably be even losing more money. Now, this is another thing I need you to know. You see this $2,000 you're looking at. Even if you're going to be trading 5 different coins. Okay, you are not supposed to all the coins. They're not supposed to take more than $2,000 all. Okay, then let me now show you how you now manage the $2,000. Now, when you're trading, you're not supposed to go all in when you're trading with this $2,000. Now, let's take an example of let's go to my Binance. Okay, so this is my Binance account. Then let's trade. Let's check the charts a bit. So let's trade. It's loading up. Let's trade CRV. Okay, let's check. Yeah, CRV is going down. So let's take a sell position. Now let's come here. Let's search CRV. This is it. So let's take a sell position. Market price. Then let's buy $20. Okay, 20. That is your first entry. Then you click on sell. Now this we are taking a sell position. Now after this sell position, the more the trade goes in your favor, you continue to add more money. Okay, so the trade has been opened. That was successful. Let's refresh. Okay, let's check. Okay, so this is the trade. So the trade is currently going on now. As the trade goes in our favor, we have to ensure that we are adding more money. As you're adding more money, if you're in negative, it will reduce the negative. If you're adding more money, if you're in positive, it will reduce the positive. Okay, which is this percentage here. Okay, here, this is it. Okay, so that's how it works. Now, when it comes to adding money, you have to be very vigilant. If not, you might probably not. And this actually calls for you to monitor your trade. Now, and that for this video, okay, there's another strategy we have. We call this stacking. Okay, now we're going to teach you stacking. That will be the next video. Then how to go in with small money. You add money as the trade goes in your favor till it gets to your take profit. Okay, so stay tuned to that video. That video will really help you to ensure that you're not losing more than you want to lose, which is the $20 according to this example. So guys, thank you very much. Then I'll see you in the next video. Bye for now.